So let's move on to how it all began. A brief overview of PAYE. Well, surprisingly, it was first introduced in 1798 to fund the Napoleonic War effort. Income tax was originally applied in Great Britain, but not Ireland, at the rate of 10% on income derived from all sources above £600 a year. Now, you wouldn't think that, well, back then, £600 a year was an awful lot of money. I don't know what it is the equivalent of today. But this was derived from property, profession, trade and offices, and it was paid in 6 instalments from June of that year. However, income tax was withdrawn after the Battle of Waterloo in 1815. However, it was reintroduced in 1842 to fund the social and economic change. The government appointed commissioners who were responsible for the administration of and administering the tax collection. There were many occasions in subsequent years when income tax was to be withdrawn, but in fact it did remain as the government had come to rely on the revenue, much like today really. However, it has undergone numerous changes to the way it was operated and administered. Income tax today is a temporary tax and it expires each year on the 5th of April, and Parliament has to reapply for it by the way of the Financial Act. PAYE was first piloted in 1940 to 1941 by Sir Kingsley Wood, the Chancellor of the Exchequer, during Winston Churchill's time. The scheme replaced the annual and biannual collection of taxes to a monthly and weekly collection as we see today. Operating PAYE is set out in statute, and therefore every employer must operate pay-as-you-earn or PAYE system in respect of an employee's pay. Every employee is eligible to pay PAYE, and there's no exclusions in regards to age or marital status. All modern payroll software packages calculate PAYE, but it is essential for you to understand in the way that it's calculated so we have a greater understanding on when we deal with queries.